Welcome to TradeTheNBI.com. This is Jonas Reports for the 10th of September. And well, just as we talked about everyone getting back to return, look what we've got here. We've got the white above red. We've got NBI magenta below, 25 in this case, and also with the yellow. Last time that occurred, we ended up with our small swift dip before it flipped back around and with shakeout approaching zero. Looking pretty weak. The upside to it, though, is steel beginning to rise, so short-term buyers activated in it, potential for a turnaround too of mid-term buyers. The gold rising at this particular level usually maintains its bullish push to a degree, but it becomes simple for us because we have the APM yellow. And right now you're getting a little bit of support right around that 4,500. It's 4,503. You can see that at the bottom corner of the do fast, and pretty simple. Above that, still going to be somewhat bullish. Below it, though, definitely expressed weakness, so it makes it pretty clean for us from that standpoint. I think that the continuation of following magenta would certainly do it, but what we look for is that pivot back, and if that takes place, then easy enough. We've got a whole new setup for a breakout to new highs. So those become the clear delineal points of where the market's at this particular stage. Low here, also at 76%. 44.63 would be your next logical dip from a breakdown of any kind going through there. Not surprising that we're seeing up move here. Last time we had this similar signal, ended up making relatively good move back up into the mid highs, only to close the day all the way down. So I think that's going to present some good intraday activity. Makes for much more interesting because, of course, people see the nice move back up after a dip to the 61%, and they get excited. And as long as there's been easy money, it's like buy the dip, any kind of dip there is, until the dip becomes a little bit more severe. And that's usually what accelerates the selling. And that's when you get these, broad moves down until the next set of buyers says, oh, that's even cheaper. I'm going to take care of that one. But as it is now, would not be surprised to see more expressed weakness from this standpoint. So bear that in mind as you are watching your charts. When we look at the NQ, not nearly as bad. So this is where, your tech setup may keep things rolling along, and it's going to have to really see a significant move of that weight literally above the 6 plus. So we're getting a divergence between the broader market and what you might call the more tech related items. And of course gold making a little bit of a turnaround, even though within its softness, and this is what we were talking about before, when you're looking for softness, that's built into it right there. With that setup and much weaker as far as steel and everything else, and that's where we tend to look at two other items here. We hadn't looked at oil in a while, and we'll look at that now because that's going to be the next, I think, relevant point, because that will drive inflation and determine whether or not we're going to see the Fed get away with pushing euro higher from a standpoint of not because the European Union is doing anything right, but simply because the Fed really likes to see that euro improvement, simply because it helps U.S. companies in the broader sector. From an oil standpoint, here we go. So we've seen this big spike up, and then a little bit of craziness as there's been a big reduction in production. And pretty good sized draws on gasoline in that. If that continues to drive and we start pushing back up towards the highs on oil, then I think you're going to see gold accelerate rapidly because that would be an expectation that interest rates, at least in the real world, will drive up even if the Fed's maintaining it, and that's just going to power inflation because there's not going to be any way around it. It'll be interesting to see how these vaccine mandates, things like that, whether that has a chilling effect at all on hiring or increases unemployment, ironically. So there's some counter forces at play with the whole virus talk, and it does matter because perception causes people to hold off doing things, and that kind of suspension can certainly affect consumer spending in other areas like that. Our Bitcoin had followed that dip coming along the baseline. We ended up buying that. We had the nice little spike. This is the one where I was talking about before, the GAM setup, not taking out at the same point that the MBI did, and some working on the code adjustment, and then it ends up taking it lower for like break even slightly lower, as opposed to capturing the peak on that profit and being able to convert into a sell signal as that presented itself. So we'll deal with that from a code standpoint. From a 50K standpoint, clearly still within the bullish range at this particular stage. So that's what you're seeing here from that early intraday boost. You have to see it turn around in the white and continue dip down of magenta below yellow. What we're getting here is the move to the zero because we have the white MBI above, and a push back up here towards the 50%. We'll see if it hits some resistance at 50%, being right around the 4508. So everything's playing out right in that early spot under 4510 range from resistances and that. So those would be the areas to really focus in on for the day. Intraday, looking at end of day. Again, some nice plays. From all those capturing the inside and the out, and just kind of was flat across the top there. Had that brief little dip that literally pivoted back up and turned around pretty quickly, and then the floor fell out after hours to clear out all those stops. It's something I'm going to work code-wise on this one, because with the white maintaining its short presence, could have lasted a little bit longer. I'm not sure if it hit the stop setup from just the ATR standpoint. I'll take a look at that, because literally a move to the highs would have been the expectation before needing to cover from a practical standpoint, allowing for a capture of that. Certainly on the turnaround from MBI, coming back up, there was the pivot pretty immediate, and created only a couple, literally one extreme histogram down here at the bottom, which promptly filled, then it went short right again shortly after that turnaround, and covered right down here at the dip. Again, I think because of the magenta moving above, but had no cross of green to sign. So I want to work on setting up that one, because it would have taken it a little bit lower before the turnaround play, which would have happened right below the 23%. Just a little bit extra, not a huge change overall, but I mean, when you look at it from a number standpoint, it went from 45 to 44.90, so decent 15 point, and probably once the extreme came in, and that's something I may look at too, where you have MBI reading and that produces positive extremes, and setting up a little bit tighter stop set up on that, because a lot of times though you'll get positive extremes spike up, comes back down, fills in those positive extremes, only to resume again. But we really wouldn't care, because we can capture the turnaround move. So it's just a matter of squeezing out as much of those gains as possible, and also allowing for potential short earlier, which is to improve things. And that's all we're looking to do, is to really isolate how the market behaves in the real world versus pie in the sky stuff, or just preset amounts. We want to really adapt to where it is, and so we can visually understand the differences when we're looking at the MBI versus DOC. Because at that particular, right at the peak, you had the DOC spread, which is that cyan moving above red right there at the peak, and then the breakdown of magenta and yellow going back below the 33 levels, so it kind of corresponded right to that 76% line. these are all the things to look at. Obviously, strategies have to look at broader sections. We can see a little bit more detail when we're looking at it, specifically from an actual trade standpoint. So those are the ideals that we try to get to, but getting closer by the day. As always, though, I will update you on anything relevant. Trade well. We'll talk in later.